The price of silver, as well as the foundations of the current global economic system, will never be the same if Saudi Arabia and the BRICS nations do the unthinkable. Now, this is a very real risk. You can see that evidenced by the fact that the United States is being drawn into a broad regional conflict in the Middle East. And this is not about the Houthis. This is not about Iran. This is about enforcing U.S. global hegemony in the region and protecting the petrodollar system. But before we get into that, and the signs that there may be a major change in the works in how the global economy functions, I want to talk about the bizarre price setting mechanism that we witness in the price of silver. Now, again, if you want a confirmation that this is a big deal, just look at the most recent headline here. Red Sea crisis, U.S. launches fourth round of strikes on Houthis in Yemen. So we're continuing to launch more airstrikes. This is escalating. And again, this is about a lot more than just the Houthis. Let's talk about silver. Don't forget, you can buy your gold and silver at SD Bullion. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. And this price setting mechanism in silver that we have been witnessing is going to change. And it's really such a strange mechanism. Look at the backdrop against which the price of silver has been falling recently. This is a report from S&P Global. Default, transition, and recovery. Corporate defaults jumped 80% in 2023 to 153. Does that sound like a strong economy to you? No. Sounds like a debt-addicted economy that is suffering under high interest rates that is going to need more stimulus very soon. Look at the companies that failed here or defaulted in December. First on the list, U.S.-based Matrix Holdings, Inc. What do? Got $200 million in commercial property investments. Okay, so you can see what's happening here. We've got commercial real estate collapsing. You got the U.S. economy starting to fall apart. You got defaults rising. You've got a U.S.-based online consumer platform, LendingTree.com or LendingTree Inc. defaulting. And if you look at the companies here that defaulted in December, it goes much deeper even than that. Now, most of these are relegated to the U.S. According to this report, the U.S. led defaults in 2023 with 63% of all defaults globally, and 2.6 times the number of defaults that the U.S. had in 2022. And they go on to say in 2024, we expect further credit deterioration globally, predominantly at the lower end of the rating scale, where close to 40% of issuers are at a risk of downgrades. They expect financing costs to remain elevated despite the prospect of rate cuts. While borrowers have reduced their 2024 maturities, a large share of speculative grade debt is expected to mature in 2025 and 2026. They think that slower economic growth and higher financing costs will contribute to increasing default rates. Okay, so on one hand, you have an economy that is going to need a lot of money to be printed. You would think that would be good for silver, but silver's falling. What's going on? Well, you've got the propaganda machine in full effect here. Janet Yellen praising the stimulus spending of the Biden administration for our current miraculous U.S. economic growth. Now, I will actually agree with Janet Yellen that the current state of the U.S. economy is a result, to some extent, of all of that stimulus spending. Of course, the U.S. has been accumulating a massive unpayable level of debt for a long time, but that spending was kind of the icing on the cake. But I think that's where my agreement with Yellen ends, in that current state of the U.S. economy is nothing other than disastrous. And of course, one thing that we can thank the stimulus for is the level of inflation, peaking at 9.1% in June 2022, gotten the much heralded disinflation where we saw it drop towards the end of 2023. But now what's happening? December 2023 headline CPI beginning to tick back up 3.4%. You got to remember, inflation is cumulative. So all of these price increases are piled on top of the previous price increases. So the actual cost of living is skyrocketing. Inflation nowhere near the Fed's 2% target, but still silver falling. So what gives? I mean, you have a collapsing economy, but you've got a talking head like Yellen telling you that everything's fine and the economy is strong. You have inflation moving up. You would think that would be good for gold and silver, right? But apparently not. You've got this guy, Fed Governor Waller telling us that interest rate cuts shouldn't be rushed. And I guess as far as inflation goes, he's kind of correct there because inflation is still very high. But the problem is, rate cuts, rate hikes, they have nothing to do with inflation. As long as the deficit spending continues and the Fed maintains its enormous $7.7 trillion balance sheet, inflation is baked into the cake. But what we do have is a U.S. economy that is falling apart. However, this jawboning by Fed officials has led to decreased expectations of price cuts, as you can see here on the CME FedWatch tool. Now, 42.9% chance being priced in that there is not going to be any rate cuts. Someone in the chat here asking if I'm actually live or are these pre-recordings. Yeah, trust me, if these were pre-recordings, I'd probably sound a lot more put together. I'd have a chance to edit them. But no, this is live, no editing. I am watching the live stream. I do want to say a big thank you to everybody who is tuning in. By the way, do me a favor, smash that like button, subscribe to the channel if you haven't yet. And that being said, let's get back to silver. So why is silver at $22.65? I mean, here on the long-term chart of silver, you can see that it is less than half of its 2011 highs. So you've got the price of silver. You can't find another asset like that, I don't think. I find another commodity that is less than half the price it was over a decade ago. I don't think it exists, but this is the case in silver. So what's happening here? Well, the price setting mechanism is being driven almost entirely by anticipation of what the Federal Reserve is going to do next. Now, some people watching might say, no, this is just proof that silver's a terrible inflation hedge. It doesn't do anything to preserve wealth. Well, silver is volatile. I will give you that. But, I mean, just take a look at the silver price chart priced in Argentine pesos and then tell me that silver is not an inflation hedge. I mean, that's pretty much straight up as their currency has been revalued. But what's different between Argentina, the Argentine peso, and the US dollar? Why is the price setting mechanism in the dollar so bizarre? And it's actually really a beneficial thing for anybody who has dollars, for anybody in the US like I am, and I think a lot of my audience is as well. I mean, the fact that you can still buy silver at a very low price in US dollars is a gift, if you ask me. I mean, just look at the Argentine peso. If somebody there wants to buy silver, and I'm sure a lot of them do because their currency is being massively devalued, they've got to pay a lot more for it now than they did in 2011. But as for us, it's on sale. Now, the difference here between the Argentine peso and the US dollar is that the dollar is the world reserve currency. That's a pretty important distinction. It allows us to export huge amounts of debt. The whole basis of the US dollar in its current incarnation, we were taken off of gold by Richard Nixon in 1971. And what did he and Henry Kissinger set us up with? Well, they set us up with the petrodollar system. This is a system by which the Saudis, and you can see Nixon there pictured with King Faisal when they were cooking this thing up, the Gulf nations led by Saudi Arabia, OPEC, they price all of their dollar exports, or all of their oil exports rather, in US dollars. This is very, very important. This is the underpinning of the dollar's status since the 1970s for the past 50 plus years. And this could be about to change. Now, we've talked about Saudi Arabia joining BRICS. There's been a lot of talk about them abandoning the petrodollar system, but it hasn't happened yet. And I think the fact that the U.S. is currently becoming embroiled in this broad-based regional conflict in the Middle East is a sign that there is a huge risk right this very moment to the petrodollar. This won't change without a war. But you got to remember, even if the U.S. is victorious in any conflict coming up, wars can frequently be the event that ends the status of a currency as the world's reserve currency. For example, World War II, before that, the British pound was the primary world reserve currency. After World War II, we got Bretton Woods because the British pound had been devalued so much because of all the spending that was, and all the borrowing, the money creation from World War I and World War II. So even if this conflict, which is about to kick off any moment, it appears, plays out in favor of the U.S., it's likely not going to be very good for the U.S. dollar. And look at this story. Look at the story that we got yesterday, or January 16th, so 2 days ago. This was at Davos. The Saudi Arabia telling us that they actually haven't joined the BRICS nations yet. Kingdom's Minister of Commerce said in a panel at the World Economic Forum, Saudi Arabia has been invited to attend BRICS. We have not yet officially joined BRICS. Now, this is the first comment from Saudi officials after the proposed join date of January 1st. Remember, they were invited following the BRICS conference in 2023. And this comment clarified the kingdom's position because earlier Saudi state TV had reported that Saudi Arabia had joined the bloc. But listen, what's going to happen when they officially join BRICS? That is my question for all of you. What will that mean? Remember, BRICS, Brazil, Russia, India, China, South Africa. China being the most important name here on this list, being one of the biggest proponents of the end of the petrodollar system, of global de-dollarization, and also China, Saudi Arabia's biggest trade partner. Now, remember, 2021, we had the Saudi Aramco CEO telling us that Saudi Arabia would be prioritizing China's energy supply for the next 50 years, making it their top priority. Okay, we also had China and Saudi Arabia signing a currency swap agreement at the end of 2023 to swap the reals for yuan, their regional currencies. What are their banks gearing up for? What could it be? What do you possibly think that might be? Could it be that Saudi Arabia and China are about to begin settling bilateral trade in oil in yuan and rial? That is exactly what Chinese President Xi Jinping was calling for in Riyadh in December of 2022 at the Gulf China Conference. He was calling on all of the Gulf nations to begin transacting via the Shanghai Petroleum and Natural Gas Exchange. Now, there have been some non-dollar denominated settlements of fossil fuels coming from the Middle East. You had Total Energy, that's a French energy company. They settled 65,000 tons of gas from the UAE, bought by China, paid for in Chinese yuan. You also had the UAE exporting crude oil to India, priced in rupees. So the stage has been set here. They've been trying things out. You know, 1 million barrels of oil here, 65,000 tons of gas here, pretty small amounts. But you can see that the pieces are being laid here. And now that time has passed, well, we're getting very close to perhaps an official announcement by these two. Who knows? It could be as early as whenever the Saudis officially decide to join BRICS. And when that happens, the dollar status as the world reserve currency, it may not be lost. I mean, look, the dollar is going to remain an important currency, barring some massive black swan event, for some time into the future, but it's going to continue losing market share. And the problem is that you can see how weak the U.S.'s economy is becoming right now as a result of these elevated interest rates. You saw that in that report from S&P Global. The Fed is going to have to begin running the printing presses again. The problem is, who's going to buy all the debt? Well, the Saudis used to be a big buyer of it. The petrodollar countries, they would re-roll their petrodollar profits and they'd buy U.S. debt. But that whole mechanism may be coming to an end. And the dollar status as the sole reserve currency of the globe may be coming under additional threat. And I think it may be only a matter of time before we begin seeing the chart priced in U.S. dollars for gold and silver the way that they look right now for Argentine pesos. That's why I'm very thankful to live in a country that has the world reserve currency. It's a huge advantage for me as a silver stacker. I can get silver really cheap. If you're living around the world in one of these countries that doesn't have that privilege of having the world reserve currency, this is what happens to a currency when it doesn't have that world reserve status, when it doesn't have a petrodollar system backing it up. It inflates massively. And it devalues against real tangible assets. So leave me a comment down below to let me know what you think about these developments in the petrodollar system, in the price of silver. Are we going to continue to see this price setting mechanism in US dollars where high inflation and weak economy results in lower prices for silver? I don't think so. I think that it's unsustainable and it's going to change. But I'd like to know what you think. And that's it for today's live stream, everybody. Please like, share it on social media, tell your friends, and stay safe. Happy stacking. I will catch you next time. Smart